South African competition authorities approved Walmart's $2.4 billion bid for Massmart, saying the retailer must not fire workers for 2 years. Walmart will own a 51% stake in local retailer Massmart without requiring the merged entity to commit to local levels of procurement. Simon, over to you.
Market cap just over 28.6 billion, price earnings 23.9, dividend yield 2.8. Chris, let's come to you first. The conditions as laid down by the tribunal, insignificant. They weren't looking to fire people anyway, probably.
Well, exactly. It was no surprise because it's very much in line with what Grant Patterson, the CEO of Massmart, came out with at the end of the hearings. And secondly, as you rightly say, if anything, Massmart is far more likely to be employing lots more people over the next 2, 3, however many more years as they expand their footprint both in South Africa and beyond. And I think some people out there were expecting to see conditions being imposed along the lines of you have to source a certain percentage of your goods from local suppliers, and that hasn't materialized.
And that would have been a nightmare in terms of managing that and policing it.
It would have been a nightmare in terms of policing it. It would only have been quasi-legal, in my opinion. I think it would have been flouted many WTO requirements, and it would have been. You would have had to apply it to other players as well, in my opinion. Otherwise, it would have been an anti-competitive factor, which would have been terribly ironic coming from a competition authority. So I think the bottom line is that it's very, very positive indeed.
Well, Andrew, when you look at some of the conditions, I mean, as you mentioned, 2 years without retrenchments, also adhering to the current labour agreements that are in the country at this point in time, and then also setting up a development program of sorts for local suppliers. Are you buying into the story? Because some of the analysts that I've spoken to today aren't really convinced that these are conditions.
Yeah, they were essentially Walmart's conditions. They came out a few weeks ago and said that this is what they're going to do, 100 million rand fund they're going to set up for SMEs.
Push to Walmart, they do $1 billion a day revenue, 100 million petty cash.
It's pocket change to them, yeah, exactly. But I think the principle's there. In principle, it's a good idea. These small and medium enterprises, that's where your employment's coming from. Massmart isn't going to go and roll out huge increase employment drastically in the local landscape. So I think, yeah, the principle's there in theory, but it's good to see that there are no procurement restrictions put on.
And in news out a short while ago, without a surprise, the unions say that they're going to oppose the ruling by the Competition Commission. Chris, do you think that they are a big threat, and perhaps not so much a threat in terms of the final decision, but perhaps in terms of delaying the process?
No, I think the process is pretty much there. I think, as I say, I think they're probably very disappointed that the requirement that I mentioned, i.e. the procurement thing, hasn't materialized. And that's probably what they're going to home in on. But at the end of the day, you know, Walmart has got a result. They are going to acquire 51% of Massmart, and it's largely a fait accompli. And I think what we have to sit back now and look at is how successful it's going to be over the next however many years that they take to roll out
that's the point. I mean, you know, it's now announced and stuff. I mean, as consumers, we're not going to see anything different tomorrow. As shareholders, not tomorrow either. How long before real benefits start flowing through, both from a consumer perspective, but more importantly, I suppose, for the shareholders?
I think it's going to take a bit longer than most people anticipate. You know, all of the rhetoric we've seen coming from Massmart and Walmart suggests that in the first instance we're going to see the main action being concentrated in operations like Cambridge, which is lower end of the market operation, and in Game. So Game will end up selling around about 40% of its products being food. That'll take a bit of time. You know, this isn't going to happen overnight, so I don't think all of a sudden we're going to see in 6 months' time a whole fleet of Walmart supercenters being rolled out in this country or anywhere else in Africa for that matter.
I think one thing we also need to keep in mind, and something reiterated by Grant Patterson today, I actually chatted to him, the fact that we're not going to see rebranding coming through on Massmart. I know that Cannon Asset Manager is not so positive on the overall retail outlook, if I'm not mistaken. Could you take us through why you do foresee challenges and how this could affect a possible deal between Walmart and Massmart?
I don't foresee any challenges. Our problem with the retail sector at the moment is the valuations that we've seen there. Obviously, Africa is the big story at the moment. Everyone's trying to buy companies that have exposure into Africa, and I think Walmart's end goal here is to move into Africa. I think South Africa is a byproduct of this whole deal. So our hesitancy, can I say that, with a Massmart is the valuations that we've seen.
Well, let's delve into dividend policy as well. A question mark that has come to the fore. Should we see a change in dividend policy? Obviously, we know that Massmart needs the cash to fund the expansion going forward. Do you think that it's going to perhaps make Massmart's investment even more lackluster going forward if they do change dividend policy?
No, I don't think so. I don't think dividend policy should change at all. If you look at the retailers, they're generally pretty generous with their dividends. I don't think Walmart's going to impose any restrictions or the cash is going to be needed for anything else. I'd expect that dividend to stay where it is. Yeah.
Chris, who's the losers here? Shoprite, Pick and Pay. I mean, a lot of talk about how Massmart's going to come in and decimate them in a sense. But you've already said this is going to be a slow process. It's going to be in certain bits of the market. Are we going to see big losers, or for Shoprite and Pick and Pay, it's business as usual, which is a very competitive business already?
Yes, as you say, highly competitive business. The top 4 retailers account for about 60% of all food retailing in South Africa, the rest being a bunch of independents. I think Raymond Ackerman, the former chairman of Pick and Pay, put it very well a few months ago. He said all of the retailers in South Africa are now going to have to lift their game. And I think that is such a very correct statement, because of the fact that what we tend to concentrate purely on the procurement side at Walmart. We lose sight of the fact that these guys are incredibly efficient operators. They bring wonderful efficiencies into the whole business. And the other guys are going to have to catch up fast. I think Pick and Pay probably have the most leeway to make up, because they've been kind of laggards in many aspects in this regard. But you know, coming from someone with the gravitas of Raymond Ackerman, and I think he's got it spot on.
With regards to what we could see going forward from a lot of the retailers, and also perhaps the spin-off effects that it could have on the likes of Tiger Brands, we've spoken about this before on the show, Nampak as well. So perhaps not any retrenchments within Massmart, but the domino effect, Andrew, is this a concern at all?
No, I don't think so. I don't see Walmart, there are no procurement restrictions, as we've said. So no, I don't think you're going to see any follow-through effects on your other your Nampaks.
So I get the sense you're overall positive on this deal.
We're happy that the deal went through. You see what happened with Potash in Canada.
Yeah.
They managed to restrict that deal. So it's good to see that we didn't do the same here. Yeah, so overall, it's a positive for us, definitely.
Fantastic. Okay, crunch time, gentlemen. Chris, hot or not?
Oh, it's
Massmart.
very, very hot.
Massmart right now.
Yes.
How would you be playing the stock right now? For those investors that have not bought into the stock, is there still time to get in? Because I chatted to Paul Turan a little earlier, and he said it's slightly too late, that the cost of now getting in could perhaps outweigh the profits going forward.
I would concur with Andrew that on a short-term view, most of the retailers, and with a few exceptions, are really quite expensive at this point in time, if your time horizon is relatively short. But I think with Massmart, you've got to take a 5-year view on this one.
Yeah.
And Walmart, you know, having such a big daddy, the biggest retailer in the world behind you, that firepower is really quite formidable. So if you take that kind of view, I think, yes, it's expensive short term, but longer term, some great prospects ahead.
So buy right now.
I think there's some great prospects ahead. Yes.
Andrew.
I'm going to go opposite to Chris here, not hot. I think it's priced for perfection at the moment, obviously with Walmart coming in. So we're not in favour of Massmart or any of the other retailers at the moment.
I take Chris's point. A 3 to 5 year view, this thing's absolutely going to fly. In the shorter term, I think there's going to be some, once they've got their 148 Rand for 51%, some folks are going to go in. But their price had the Walmart premium in it. It's had price to perfection. In the shorter term, not so hot. But if you want 3 or 5 years, pick it up on weakness around the 130s levels.
Fantastic. And with regards to other retailers, Simon, any retailers that tickle your fancy at this point?
In this space, I still like Shoprite, but I think they're expensive. I think they're going to come lower.
Yeah.
I particularly don't like Pick and Pay. I know everyone's got them for recovery. I want to start seeing that recovery. And they look like they've lost their way to a degree.
And Andrew, I shouldn't even bother asking you if you're in any retailer at this point. Absolutely
No, we're not.
Okay, Chris.
I like quite a few of them, in fact. Yeah, JD, Lewis, Mr. Price. Yeah, I think they're looking great.
None of which products you can consume from these companies.
Not food retailers, no. One of the things I think we must make clear here is that the National Credit Act was, in retrospect, has actually been a very good thing. And one of the things that people lose sight of is that although in the short term it's perhaps worked against people taking out credit, in the longer term, it means that I think the recovery will have more legs. That's one of the reasons I still like the retail sector.
Fantastic. On that note, yes.
If I can just correct myself, we do actually hold Lewis. The food retailers is the retailers that we
stay away from.
Staying away from at the moment. Lewis JD Group, I'll concur with Chris there.
Fantastic. On the fixed line operator front, Telkom says it expects profits to be lower for the year to March because of losses from its startup mobile phone business and employee severance costs. It said it expected normalized headline earnings per share to be 25 to 45% lower from the restated 686.7 cents. The company added it was restating its 2010 results to reflect the sale of part of its multi-links operation in Nigeria, which it said it was disposing of in April. Simon.
Market cap 18.8 billion, price earnings 7.8 and a dividend yield of 3.3. Let's come to you first. The HR setup costs 1.1 billion rand to enter a mobile market that is already crowded. We have more phones in this country than people, and if they could get a slice of the action, yes, but you got to look at Virgin, you got to look at Cell C, you got to say, I don't know if that's not perhaps 1.1 billion kind of just wasted away.
Yeah, we've seen them waste some money in the past before. I think we don't even think too far past multi-links. I think that cost them about 10 billion rand.
I mean, it's a small cash for them.
No, it's not, unfortunately. I think it could be a step too far in the meantime. I don't think we're going to see any profits coming out of the HR.
In essence, I suppose they're trying to do that divergence where they can sell you a fixed line, they can sell you a mobile, they can give you internet. I think the crowning glory might have also been a TV channel, but we know what happened to
I think
Telkom Media.
Their competitive advantage also, I think, is this a product that's MTN or Vodacom can't put out there, given your fixed line, etc., etc. They're also saying they've got pricing power with interconnection rates. They can offer lower rates than what a Vodacom can, but you still got to wonder. Ruben September was chasing empires a few years ago. Maybe this was his brainchild a couple of years ago, and it might be a legacy.
You know, I find Telkom quite fascinating because when you look at its product line, you know, you see a lot of glimmers of light there. But at the end of the day, you've seen retrenchments coming through, and we know this has created a backlog in terms of delivering on services. So a lot of concern in terms of operations on the ground, Chris. Do you think that Telkom finally has reached the bottom here, or do you think there's more pain to come?
Look, I certainly hope so, and I think you know, Pinky Maholi is very well equipped to handle this, but it's going to be the devil's own job for the next few years because of so many legacy issues. And prime amongst them, in my opinion, is the fact that they didn't keep their fixed line up to scratch. They diverted attention from their own backyard. They went into things like multi-links, into the mobile space, when in fact, in my opinion, what they should have done is to have recognized that over time you're going to get more and more players coming in wanting that fixed line capacity, and they could have sold that off and got annuity income in perpetuity. They chose not to, or perhaps they were told not to by the powers that be at the time. Whatever the reason, that plus other legacy issues has left it with a host of problems that, in my opinion, are going to take many years to resolve.
Do you think that it was the right thing to do for retrenchments in the South African space for Telkom? Because we keep hearing of backlogs.
Yeah, look, I don't know if they have any choice in the matter, in the sense that, you know, it's
that's the way you lose customers, though, Chris.
Yeah, well, you know, I think if they had addressed some of those more strategic issues that I've just mentioned, they would have kept a lot more of those customers.
And part of the thing is that Neotel, second network operator, was what, 5 or 6 years late to market, hasn't really taken off, very much focused more on the companies rather than the private individuals. That, in a sense, makes sense. But you look at Neotel, I think if you spoke to the average person in the street, they're going to say Neotel's been a failure in terms of competing with Telkom.
No, that's right. And it's this last part, you know, the bit where they do the little wireless bit between the point to your home. You know, I've only heard bad things from individual customers about Neotel, but corporates, maybe there's some better stuff there.
Andrew, you own Telkom.
We do.
You do.
We've
Tell us a little bit about the strategy behind owning the stock, and what would make you relook at your holding?
We've held it for some time now, and I guess we are looking at the performance, we're kind of married to it now, if I can say that.
A divorce in the pipeline?
It actually hasn't performed that badly. Everyone looks at it over the last year or so, and it hasn't done anything. The share price has stayed at 36 Rand. If you go back 2 years ago, it's outperformed MTN and it's outperformed Vodacom when you take in the special dividends, etc., etc. So on the total return over 2 years, it's actually been the top performing Telkom company. So it hasn't been, everyone thinks of Telkom, they think of the service they're receiving at home. You hear about government's ownership, they're meddling in it. You think of Transnet, the way government runs SAA and that sort of thing. So it's got a very bad image, and management without doubt has been poor. It's got fantastic assets, I believe. We were talking before, the copper under the ground is worth more than the market cap. Yeah, they're not going to go and dig up the copper. But it just needs a catalyst. Something's got to, it trades on a P of about 4.5, I think. It needs a catalyst there. You're not going to see earnings expansion, but you will see multiple expansion when they do eventually get rid of this bad
speaking of copper under the ground, we know that local loop unbundling could become a reality, which means that the copper under the ground won't completely be owned by Telkom. Is that a concern then?
No, I don't think that's too much of a concern. I don't think we're building that into our investment case at the moment.
Okay. Hot or not, Chris?
No, pretty frigid.
Frigid?
Yes.
Do you have a landline at home?
I do.
Telkom?
Telkom one, and it's a wire. It's prepaid, and it's fantastic, and it works very, very well.
Okay.
And it's cheap.
Andrew?
I'm going to have to go hot. We're still waiting for this catalyst that you've been waiting for
Would you be
3-4
accumulating
years.
at these levels?
We're not accumulating.
Okay.
We're holding
hold
what
and
we...
see.
Yeah.
Simon?
No, not hot, not hot. Even if, I mean, who's going to dig up all that copper under the ground? Far too much like hard work. You know, brilliant assets, as Chris says. I mean, my landline at home, it works, it's cheap, it's everything.
And local loop unbundling could be perhaps the game changer as well, depending on how the revenues are going to work. And
yeah, there's a lot out there which gets in the way. A lot of new cables coming in, move to data, voice over IP. Not hot.